Mining to human settlements now, where the Gauteng Human Settlements Department has released a report into loans from the Gauteng Partnership Fund allegedly awarded to Nonkwelo Investments, which is the Deputy President's son-in-law's company. We speak now to Katleho Sekhotho. Katleho, as the report has exonerated all parties, it found no foul play. Give us a little bit of background in terms of what the allegations were.
Certainly, Dudu. You know what we heard here from the Gauteng Human Settlements MEC, Lebogang Maile, that this report delved into whether there was any kind of unlawful behavior between the loan awarded to Nonkwelo Investments. Obviously, here being the bone of contention that this company being owned by the son-in-law of the Deputy President Paul Mashatile, who was at the time actually the Human Settlements MEC between the period of 2013 and 2017, but outlining that the amount of 30 million was actually not the correct amount, and that in total, I understand the loan or the amount that was used by the investment company was just over 7 million rand. But the MEC did highlight that there was, a slight perhaps wrongdoing in the changing of the scope of the loan throughout the years, that when it changed, in allowing more money or more funding, perhaps at the time, that could have been used by the company. But to get the details from the CEO of the Gauteng Partnership Fund, I have the CEO with me, Lindiwe Kwele, just to explain what we've heard from the MEC, really dispelling some of the allegations, and that the fund really at this point was facing really some reputable or reputation risk due to a story like this. Yeah. Just your reaction to what we've heard about the report.
Thank you so much. I'm just glad that we finally come to this point where the MEC was able to table the report, indicating really that the investigation outcome has confirmed that the amount that was disbursed was not 30 million but 7.2 million, and they were able to also confirm that amount was actually utilized for what it was intended for. Obviously, they raised certain issues in relation to document management at the time, because remember, we are dealing with an issue that happened 10 years ago, and again, there are issues where around certain policies that were not signed, so they were not sure in terms of which policy reference was guiding the process and the approval that took place at the time. But in terms of the delegation of authority for the investment committee, they confirm that the decision that they took in approving this was in accordance with their DOA, so there's nothing wrong there. The only bone of contention is the issue of approving the restructure, because when they came in, at first they were approved as the EEPF, which is our Entrepreneurial and Empowerment Property Fund, which then gave the junior loan facility up to 15 million at the time. And then when they discovered that there were cost overruns, that's where the investigators are having a problem to say, why would you agree to the restructuring, for moving from the EPF social housing to student accommodation, where there are cost overruns, where we're not exposing the GPF to more greater risk. So that is the bone of contention. But I also want to confirm that when that restructuring happened, and our subsequent funding partner, which was NHFC at the time, when they cancelled the senior funding, GPF assumed 100% funding. But when it moved to the student accommodation, it required them to actually raise more funding, because they wanted to restructure to student accommodation and move it from 45 unit to 90 unit, which meant that they needed to get more funding. And when that did not take place, the whole project fell apart, because it was no longer financially viable, and that is why there was no even drawing from even the junior funding, which was the 15 million at the particular time, but only 7.2 was drawn out because of the work that needed to be done around your bulk earthworks, around your professional works, and the establishment, the planning approvals and the likes. So in essence, that's what the report is basically saying. And then also it is important to actually mirror that against the governance protocols that are prevailing currently at the GPF, because at that time there was a committee committee that was evaluating the onboarding of the EPF beneficiaries. But the GPF of today, we have a technical credit risk committee, which has a charter, which is clear terms of reference, comprising and removing concentration risk from just one person overseeing the process. There's risk, there's finance, there's project, there's everyone sitting there. And that report, after it has gone through the legal, technical, and financial due diligence, it then comes to us at EXCO. And once we've also approved that, it then goes to our investment committee. But what is also important is that, as I said, the delegation of authority from the investment committee was done in accordance with that. And even the student accommodation as a product was already part of our investment policy. So the issues was document management, the issues was maybe tightening the KYC, and I'm glad to inform you that the GPF of today, we have an anti-money laundering policy, even people, politically exposed people policy, as well as we've strengthened our KYC, know your client process, but also to avoid the manipulation or perceived conflict of interest. We have a loan application system where everything from the cradle to the grave in terms of how we onboard potential beneficiaries is managed and tracked and audited, as well as the loan management system. So in terms of our governance, I think even the Auditor General, when this issue came out in the public domain, they had to zoom in our financials as well as our disclosures on our AFS. And we were found not wanting. You know, we still received our financials, received our unqualified audit. So we are one of the institutions that is well run, well governed, and we are proud of the work that we have done as a GPF to date, appreciating that there may have been some internal control deficiencies around document management and the likes, but right now we have all of that in place. So we want to assure our investors, our partners, because remember, the work that we do as a GPF, we do not get funding from the provincial fiscus. We act as an implementing agent, and the management fee that we get there is the one that really keeps us going. Then we reinvest that into our capital investment, as well as the interest loan, the interest income from the banks, as well as from the project lending. And also we need to assure our partners that they will get their sound returns and that their money is safeguarded in line with international best practice around good governance and financial management and record keeping and credit control and debtors management in its entirety. Thank you so much.
Thank you so much for your time, CEO. Dudu, you heard it there from the CEO of the Gauteng Partnership Fund, really outlining that there wasn't anything wrong that happened during that time. Perhaps the only damage that, or the bone of contention, was when the loan or the structure of the loan had been changed over the years, but also outlining that there have been steps that have been taken now to make sure that any investment that is made is tightened and it's looked into, and that all the proper processes are followed. And therefore, from the briefing today, Maile, really clearing the GPF and outlining that report, which also clears the loan agreement between GPF and Nonkwelo Investments.
Okay, thank you very much, Katleho Sekhotho.